Recently, the market sentiment was forcing traders to choose a carry trade strategy. The fact is that traders were more interested in the currencies of the countries with the highest interest rates. Thus, last year, the US dollar managed to reach a 20-year high amid the Fed's aggressive approach. Now, market participants are speculating about a possible slowdown in the key rate hike. At the next meeting, the results of which will be disclosed on February 1st, the Fed could raise the benchmark rate by 25 basis points. In our video review, we will focus on this and other events that may shape trader sentiment early next week. Last week, all eyes were turned to a possible recession in the United States. However, the threat was withdrawn by strong data on the US economic growth for the fourth quarter of 2022. Early next week, investors may start speculating about a recession in Germany, which is the largest Eurozone economy. That's why this information is very important for the whole region and is likely to determine the future movements of the euro. Notably, forecasts are quite gloomy. Initial estimates may unveil stagnation in the fourth quarter of 2022. In other words, during the period from October to December, the German economy did not expand. Such news may disappoint traders, especially ahead of the GDP data for all Eurozone countries, which will be disclosed on Tuesday. Also, this day, traders who prefer an Asian-Pacific session will wait for important news. Thus, China will publish its manufacturing PMI report for January. It's obvious that the world's second-largest economy is gaining momentum after 3 years of stagnation. Although the indicator is rising, it still remains in the contraction area. However, the data could encourage traders and boost appetite for risk assets. The Australian dollar, as a risk sentiment barometer of the Asia-Pacific session, may increase against the US dollar. Let us return to recession issue in the Eurozone. For a long time, the economic growth on a quarterly basis was close to zero. However, data for the fourth quarter of 2022 may show a decline in the negative area. Notably, a technical recession is announced if, on a quarterly basis, GDP remains below zero for 2 months in a row. If the negative predictions come true, the Eurozone economy will have every chance to tip into recession. Curiously, the European Central Bank remains stuck to its hawkish stance amid such unfavorable conditions. The regulator even intends to raise the benchmark rate by 50 basis points at the next meeting, which is scheduled for February 2. The monetary authorities are trying to slacken inflation by hiking interest rates. Their plans are coming true as inflation growth is not as rapid as it was earlier. On Wednesday, the Eurozone will disclose its initial inflation estimates for January. The report is expected to unveil a slowdown to 9% or even to 8.7% per annum. Traders may react with a sell-off. The fact is that lower inflation may allow the central bank to slacken the key rate hike. The US Central Bank may also slow down the pace of the interest rate hike. The next FOMC meeting is the most important event of recent months. Although Fed's officials emphasize the necessity to raise the benchmark rate to 5% and keep it at this level until inflation returns to 2% per annum, traders suppose that the key rate will be raised by just 25 basis points. If the predictions come true, traders will start selling off the greenback. However, the US dollar is unlikely to slump since traders have already priced in the meeting's results. Nevertheless, no one can say for sure what decision the Fed will take. How we're going to be in the short term in financial markets, we will definitely tell you in our news releases. Don't miss them. Subscribe to our channel and stay up to date with us. See you soon.